Microsoft will be reporting earnings after hours in less than 1 hour. Today, July 25. It is now 3:08 p.m. So, will Microsoft go down or up after earnings? What is our prediction based on unusual options activity? So, without further ado, let's get right into these unusual options. Today, we're seeing these 380 strike calls, 380 strike calls, 355 strike calls, 300 strike puts, 350 strike calls. And one of the more significant ones is these 390 strike calls. You see multiple for the September 15s. Okay. Why is this more meaningful? Well, let's take a look. For the September 15th, this is 52 days away. When we look at the 390 strike calls, notice how the volume here is a lot greater than the open interest. So these are opening trades, okay? So we believe they are buying the 390, and they paid about different prices, 380, 350, 350. So let's say 350 for our analyses, okay? Currently they're worth 420 now, so actually they're profitable already. So 350, analyze this, you'll see here, this is bullish because as the price goes up, this trade will be profitable, right? We have a positive 20 delta per call option here, okay? And all right, so let's take a look at the other ones. All right, so the 380 strike call here looks like they're selling the call, and this is not necessarily bearish because Microsoft is at 350, so for it to break 380, right, that would be all the way up here to 380 here. So for this to actually break it, less likely, right? Not so likely because it would have to break that 52-week high. All right, so they could just be selling this for to collect the premium because of the volatility that is higher right before earnings. Okay. For this 380 here, August 18, let's take a look. August 18, 24 days away, 380 strike calls. Here, we can't tell so clearly because you could see the volume here is less than the open interest, right? So it's possible they are closing this trade, and they could be buying it to close it. And yeah, we believe they're actually buying it to open instead. And so if you analyze this trade, it's also going to be bullish as well. Okay, they paid. Let me see. Let's see. They paid $359 for them. Okay, so this is $359. So it was about the same price as the September's. You can see here the cost of these options, pretty similar. Okay, so when we take a look at the 300 strike puts, all right, for August 18, now it looks bearish, right? We'll take a look at it. August 18, 300 strike puts. We can see here volume is still less than the open interest, right? And keep in mind 300 strike is quite down, right? So we think this is more of a closing trade here. And if there is an opening, then it's more likely that they sold it to open, which is more bullish than it is bearish. Okay, because 300 is all the way down here, right? So for it to drop all the way down here to 300, very low probability based on our analysis. Okay, so take a look at Microsoft. To drop all the way down would definitely be all the way here since its last earnings, right? It would have to be a very, very disappointing and definitely surprising for it to drop that much. That's a 15% drop down to 314.6% drop, right? For Microsoft. Okay, so definitely would make the markets all go down tomorrow, since this is big tech that covers up a lot of the weighting for the indexes. Okay, so what else do we have here? 350 strike calls, August 18. 350 strike calls, right at the money here. Okay, but these could be closing trades. They could be selling them to close. All right. So based on a lot of this analysis, we do think actually that Microsoft will be going up after earnings. That is our prediction. We may not be right, but based on our analysis, that's what we are leaning towards. We haven't been tracking Microsoft very much, but our analysis is that it go up for earnings. And keep in mind also that most of our earnings trades, when we do earnings trades, that doesn't make up the bulk of our portfolio, and our profitability is not dependent on just earnings. Most of our profitability and profits are all coming from our trades when we analyze other unusual options activity, not during earnings, because earnings is a lot more risky. And so we don't put as much weight onto these trades for earnings. Not a lot of position sizing because of its potential of surprises. So keep that in mind, that the profitability of our portfolio is not weighted so much in position side as much for earnings trades. It's mostly the shares, the stocks that we pick for our members. And so if you want to get access to those videos, join our membership. Click the join button on our channel homepage to learn more. That way you can diversify your portfolio with higher probability stocks going the way we are predicting it based on unusual options activity.